Hi traders, welcome to this video. Today I want to talk about institutional support in stocks. First of all, what is institutional support? Institutions are companies in the finance industries which invest into stocks. So for example, mutual funds, hedge funds, pension funds, etc. They are the market participants who drives the stock price. All the small retail traders, they are not able to push the prices higher in a stock. So you need the institutions on your back to ride big trends in stocks. And you want to buy stocks which have a lot of institutional support, because if institutions buy stocks, they will not dump it in a few weeks or a month. No, they will sometimes hold their positions for years. And that means they are adding to their positions, they are increasing the size of their positions, sometimes decreasing it. But you want to make sure that your stock always have a big fellowship of institutions. This is an area where I am also improving my knowledge and improving my tactics. So, but I think the institutional sponsorship or institutional support is one of the most underrated areas. I want to give you some insights into this. So here you can see the screen from Marketsmith. This is a product from Investors Business Daily, and they also give insights into the institutional sponsorship. They do it by two things. The first one is they have an individual rating per stock. I personally don't use this rating, but what I look for is the number of funds. You can see it here. And the number of funds always shows you how many funds bought the stock or have the stock in their portfolio. In this example here, Dexcom, you can see that at the end of March 2020, 1,278 companies or funds had Dexcom in their portfolio. And you can see that the number of funds rose from quarter to quarter. So the sponsorship or fellowship of funds in this stock is increasing, which is a good sign, because more and more funds added Dexcom to their portfolios. And Marketsmith also offers more informations about the sponsorship. So if you go here into the tab Owners and Funds, you can see the number of funds for the last few quarters here, from June 2018 until end of March. And you can also here see that in the last 2 years, the sponsorship increased or doubled here in Dexcom. And you can click on the button here, show fund ownership. And in that situation, you can see which funds own Dexcom. And you can sort them by rank, for example. Rank is a proprietary criteria from IBD. They rank all the mutual funds, growth mutual funds, and also value mutual funds by the quality, especially in the return in the last year. And you can see that Dexcom is owned by a lot of A+ ranked mutual funds, which is a good sign. So you can see that a lot of very successful mutual funds own Dexcom. So if you look at other stocks here, for example, Fiverr, you can see that only 50 funds own Fiverr at the moment. This is a very small number, but you must also have in your mind that Fiverr is an IPO, so funds need time to build positions. And if you now look at the rank, for example, which funds own Fiverr, you can see that also here a lot of A+ and A funds own Fiverr. You can see that Fidelity bought a small position in Fiverr stocks, and Baron Global Advantage Retail had a little bit larger position here. 1.63% of the fund's assets are invested into Fiverr. I personally think there is no number of funds which you should consider. I personally only look that the number of funds are increasing in the last quarter, and that not too much funds own the stock. So for example, if you look at Apple, Apple is has a wide followership. 5,300 funds own Apple, and that's a lot. But you can also see that the market cap is so large, and this is a fund this is a stock which must be owned by a lot of institutions. And there is another very nice functionality, and this is what I want to show you here. And this is the Marketsmith fund screener. And if you click on the top-rated growth funds, not top-rated value funds, you can see all the top-rated growth funds, and you can sort them. And you can sort them by 3-year return or year-to-date return. And you can now look at the funds which have the best return or the best performance. And the number one or the best fund is at the moment Morgan Stanley Institutional Discovery. And you can also look at the holdings of this fund. If you click here on the tab holdings, you can see what they own at the moment. And you can see another very interesting number. And this is, you can see how much of the capital is invested into the top 10 holdings. This is an interesting number for me because I can see how the fund management take risk, and how the fund management concentrates their capital in the best ideas. And you can see here in this institutional discovery fund from Morgan Stanley, they have 40% in their top 10 holdings. And you can see here the top 10 holdings: Spotify, Dexcom, Shopify, Twitter, Trade Desk, Okta, Coupa. You all know these names if you follow my newsletter or if you follow me on Twitter. And you can look at all the holdings from Morgan Stanley. And you can see how many capital is invested here. You can see that they have a position around 4.9% in Dexcom, or 4.77% in Shopify, etc. And you can see that the stocks on the last positions here, 40 is Overstock, Moderna, Farfetch, Datadog. So all the stocks which also underperformed in the last quarters. Okay, I also wanted to show you another fund. If we go back to the top-rated growth funds, you can see that Morgan Stanley has another fund here. This is the Inside Fund, Morgan Stanley Inside Fund. And there is another one, Virtus Sevenberger Innovative. And this is also a smaller fund, and you can see that they concentrated over 50% of their capital in the top 10 stocks. And let's look at their top stocks. So they have a big position, or had a big position, in Tesla. You must always have in mind that this data is from end of March. So they had a big position in Tesla, they had a big position in Shopify, in Exact Science, Teladoc. So a lot of names you already know and which performed very, very good. And you must always have in mind, they have their biggest positions in stocks which performed very, very good in the last months. And you can see that institutions, or if you look into the holdings of the institutions, you can see what they are buying. And they are buying it not on one day or 2 days. No, they increase it over time. And they invest the money into the best holdings. And Tesla was a stock which had a very nice uptrend. Shopify also, Teladoc, Trade Desk went sideways. Netflix, Amazon, Nvidia, etc. All great stocks in the last months or in the last years. And I want to give you another very interesting insight. And you can visit the websites of the funds. So let's look at Virtus Sevenberger at the website, and you can see everything around this mutual fund here. You can read something about their investment philosophy. You can see the management. You can also Google the fund managers. You can see their current positions. Sometimes they give daily or weekly updates about their positioning. You can see, of course, the performance of the fund in the last year. You can see how they performed against the benchmark, and you can see that they beat the benchmark in the last 10 years, in the last 5 years, in the last 3 years, in the last year, in the last 3 months, and also year to date. So they are very, very good in stock selection, and they are very good in beating their index. And they also offer a lot of materials. And you can read a lot of about their philosophy and what they did. And let's jump into that. I selected here, this is a presentation about the fund, Virtus Sevenberger Innovative Growth Fund. And you can read a lot of things about the company. You can read how they are structured. This is not so interesting. You can see why they invest into Amazon, Tesla, or Facebook, and you can see what they are doing. So you get a lot of insights how the institutions think and what they are interested in, and this gives you also inspiration for your own trading. So where to look, because you want to follow the smart money, you want to follow the institutions. Let's go a little bit deeper. You can see here they think about how people today live and why they invest in companies. And then they have one chart here about cannabis potential. I think the presentation is a little bit older, but this is the chart I want to show you. And this is top holdings and when they bought them. You can see held since. And let's look at one or two of them. Teladoc. You can see they bought it in March 2017. Let's look at Teladoc here. Okay, I open that in Marketsmith, and let's go back to March 2017. You can see they bought it, I'll make it a little bit bigger, they bought it very early in the cycle. You can see here is the IPO of the stock, IPO base. Then here in March 2017 they bought Teladoc and they hold it until today. The only thing what they are doing is they vary their position size. So they increase it and decrease it based on the performance and based on the conviction they have into Teladoc. And sometimes the position is a little bit smaller, sometimes it is bigger. But you can see they bought it very, very early and hold it on today. Let's look at another one. Let's look, for example, on Shopify, November 2016. Let's look. 2016. So November 2016, that is around here. So in this consolidation, they started to buy Shopify and they hold it until today. I personally bought Shopify here, so it was January 2017. They bought it earlier and they created, with their buying power, they supported the stock here and created the base. So let's look at, for example, let's take Ring Central. Another one which was on my watch list for months. Let's look when they bought it. Ring Central, July 2019. So that is here in that base they bought it and hold it until today. So yeah, that was stock already doubled from that buy point. Okay, let's take the last one. Let's take Nvidia, August 2017. Nvidia, August 2017. That was around here. Yeah, stock rallied some time and they bought it and hold it until today. That stock doubled, but you can see they hold it through a large consolidation. They do it because they are convinced of the stock, but I'm very sure that they decreased their position size here in the base and maybe only bought it back on new rallies or on deep corrections. Okay, so I want to show you another thing from Virtus Sevenberger, and this is quarterly commentary. And you can see in this quarterly commentary what they bought, why they bought it, and why they reduced positions. You can see here purchases and sales. They wrote, during the last quarter we bought Cooper, Zoom, Viva, Luckin Coffee, Roku. We sold Pluralsight, Sage, Revolve, Wayfair, Tilray. And if you have those names in your head and you have the charts in your mind, you can see Cooper went up, Zoom went up, Viva also went up, Luckin Coffee, okay, crashed, but they don't have any position. Roku, I think, goes sideways depending on when they bought it. And all the other names, Wayfair crashed, Tilray crashed. So they reduced they reduced the positions and weaker names and bought more of the stronger ones. And yeah, you can read a lot of informations in those commentary files. And you find such informations, which I show you here from Virtus. You find that also for the Morgan Stanley fund, which I showed you in the beginning, Discovery portfolio. You can see how the Discovery fund outperformed their index over time. You can read more about their positions. You can read more about their fund manager. You can Google all the names. And here in the resources section, you find also fact card, commentaries, etc. And I recommend to use this information to get more insights in the world of institutions, to see how they think and to see what they buy and what they sell. Because if I personally look at my portfolio and if I look at other portfolios from Sevenberger and also Morgan Stanley, they have a lot in common, and this is not because I followed these institutions. It's more, I find the great stocks and then buy them. But why do I find the great stocks? Because I follow price. And if I follow price, I follow the buying and selling of the institutions. And if I see a stock which has a great relative strength, good fundamentals, etc., I can be sure that's also on the list of the institutions. And in the next prospectus or after 1 quarter, you will see if institutions bought into the stock or not. And I think this is a great way to see what institutions are doing, and they can help you to find some interesting stocks and make sure that you are on the side of the big money. Okay, I hope this video helped you a little bit to get more insights into the world of institutions and institutional sponsorship of stocks. You can follow me on Twitter. You can subscribe to my free Sunday newsletter to get some stock ideas from my watch list and other interesting trading tips. And of course, you can find me also on Instagram and on Facebook.